Welcome to the Brainstorm, episode 110. I leave for 3 weeks, come back, and the market is in shambles. Brett and Nick, what happened? Why is everyone so sad? Why is Bitcoin selling off? Why did everyone dump their Nvidia shares? Where do you want to start?
Well, there's clearly like some macro stuff going on. The government shutdown soaks liquidity out of the system. People are looking at the Fed that is not really going to get a complete set of macroeconomic indicators before it has to make its next decision. If you look at Fed futures, the odds of a rate cut have fallen. And there is a prevailing narrative that actually AI was a bubble all along. We should have known. The bubble is popping. People are going to stop spending. All of the capex on data center is going to go to waste. What are we doing? And in crypto, my gosh, I would not be surprised if 3 weeks from now we learn about a hedge fund that everybody was supposed to know about that has gotten over its skis on leverage and is blown up somewhere in Asia. And you're like, oh yeah, didn't you hear about Seven Rivers Capital? They were, financing 25% of the margin here, and they're now dead. It feels like somebody's being liquidated, and actually, it feels like it's happening maybe outside of kind of more in the native crypto markets than in traditional financial markets, where the likes of like MicroStrategy's pref shares and stuff don't seem to be puking. So it seems like it's kind of specific to crypto. But I don't know, Nick, what did you do?
I don't believe this is anything to do with me, but I think it is interesting on the Nvidia side and AI, where I think you have two major announcements on, at least the AI bubble, fueling the AI bubble narrative. One is, I think it was Peter Thiel disclosed that he's sold his entire Nvidia stake, and you also had SoftBank disclose that they've sold out of their Nvidia stake. And I think people are using that to question whether or not, this is now the late stage of the rally and Nvidia is potentially overvalued. But I think we would argue differently. Right, Brett?
Well, I think
or
bubble,
maybe forget Nvidia specifically, but
yes.
AI generally as a bubble narrative.
Yes, I think the bubble won't actually deflate until you get over your skis against in demand, and there's no indication, at least that I can see, that's going to happen or likely to happen. By in demand, I mean people need to still be paying for these tools. Indirect monetization needs to work in some way, kind of like at a modeling level. Right now, the tools are productivity delivering to knowledge workers, and we think the productivity delivering is going to triple over the course of this year and probably triple again the next year. And so from the perspective of somebody who pays for these things, kind of my willingness to pay, I might not be paying 9x over 2 years, but certainly my willingness to pay will increase on that order. And I think it's pretty clear we're going to go to billions and maybe 4 to 5 billion users of AI chatbots by late 2020s, maybe as early as 2028, given the trajectory that people are taking these things up. And so you have kind of a pretty solid 40 to 50x kind of like pricing support on the in-demand side. And if you're buying NVIDIA chips and you're trying to acquisition power, you're trying to plug them in, and you're looking around and you don't have an outlet to plug them into, you might be like, well, I'm going to hold off on buying the chips until I can line up the power. So you could have kind of like in between hiccups in deployment of the underlying compute on the basis of sorting out the supply side. So Sam, is that what is potentially happening here?
I mean, I think that could be a piece, but I want to talk, Brett, what you just said, right? The willingness to pay. And then I had this conversation with Nick last week as well, which is that monetization lags in a lot of these transitions. And it's like, given how concentrated, it's like the entire market is AI currently. It feels like, right? It's like, that's where everyone's focused. That's where the growth is. If you stripped AI out of the equation, I think that would lead to a recession in a pretty violent fashion.
Sam, tap me
Right?
in here. Tap me in here.
All right, but right, so it's like there's a lot of hyper focus. There's certainly a narrowing, and then it's like in order to get the strength and the broadening out, there needs to be that productivity increase and willingness to pay across more players. Nick, you want to be
Yeah,
tapped in on
I want to be tapped in
monetization lagging here.
because I know it's gonna get under Brett's skin, and I know we disagree here, Brett, but I think at least where I could see the narrative shift is you have two types of AI companies, some with revenue from existing business lines. Well, just use Google as a great example of that, Alphabet. And then you have other players that are making all of their revenue on new products, subscription. We'll use OpenAI as that example. And I think what's going to happen over the course of the next year or two, OpenAI is going to need to scale their monetization efforts. One way to do that is continue to monetize at the same rate on a user percentage basis as they have been. So if you go from 1 billion users to 2, that's great. But the other more efficient way for them to do it is also scale their pricing. And as you allude to, Brett, you think that there's huge, price, call it gap in what consumers would be willing to pay versus what they're paying now. And this is where I disagree with you and think that a company like Alphabet sits in the driver's seat because they have this huge business from advertising that spits off a tremendous amount of cash flow. And they're extremely incentivized to keep pricing as low as possible to squeeze OpenAI and all of these other private companies that need pricing to go up. And so I think this is where the narrative around AI is going to come to a head because you're going to have companies artificially like deflate or in relative terms because you're putting in so much efficiency and progress in the actual model and it's providing all of this value, but you're keeping the price artificially low relative to what users would pay to keep your competitors in a really tough position.
So
And
you're
this
saying
drives-
If it was
consumers-
like a niche market for them, I think that's probably a valid concern. As in, I brought up Slack versus Teams, where Teams, Microsoft just bundled it in for free. Slack was trying to price kind of like a freemium model, but basically selling it into enterprise at an enterprise type price, and their growth got clipped off by Microsoft that was just bundling and doing it as a part of their services. Two differences here. One, the scale of the revenues that they'd have to be taking a bath on from a gross margin perspective is actually quite large. And so the amount of investment in price competition that the Googles of the world would have to push into is really actually would be reasonably destructive to their margins and would cause them to have difficulty on the CapEx side. Look at what happened to Facebook, Meta. Meta is like, we're going to invest 70 billion in CapEx and margins are going to take a hit. And Wall Street's like, no, don't do it. And so that signal, the tech leaders are going to look at that signal and be like, I don't know if I want to go down that particular road. Two, it's not a question of price competition when you have demand for the service that you can't meet because of supply. As in, what is the benefit to Google to price low if OpenAI then sloughs some traffic their way, but then is able to actually meet the demand that they have on the customers that they have? As in, OpenAI is having to restrict kind of the product that they're putting out because they're out of GPUs, right? They're shuffling their GPUs around between users. And so kind of at the margin, Google can be like, oh, here's Nano Banana. You can use it for free, which is their image generation model. And people will be like, wee, image generation for free, my favorite. And they'll use a lot of it. And OpenAI is like, oh, good. We can service the users who are actually desperate to pay for our services that we've had to kind of like restrict their ability to do so.
I agree with parts of it. Where I think you're wrong is thinking that Google doesn't and can't maintain the margins they're seeing because of how much AI actually flows back into their core businesses. One, because they've already told us that they can command relatively the same CPM in AI advertising.
But
And
no, what I'm saying is the size of this particular market that they're going to give away in your conjecture to kind of like dominate or squish the OpenAIs and Anthropics of the world is so big and quick growing that independent of their search business, which I'd argue is also probably under margin pressure, independent of that, then this giveaway that they're doing becomes
It's a big giveaway.
a reduced, reduces their return on capital.
It's a giveaway to lock you back into their core products, because Gemini is not just a standalone application. It's across Chrome. It's across all of their products. GCP.
If you look at the Gemini app, and you look at the minutes per user per daily active.
ChatGPTs are coming down, by the way.
Okay.
Just so you
Just
understand
let me
where
cite
this is going to go.
Per day, per daily user, ChatGPT users use it on the order of 15 minutes. Gemini users use it for two. It's lowest of all of them. So giving away, not only, there's a degree to which you can, it's kind of like the memojis that Apple does. It's like, here's a cool thing. And everybody's like, oh, I'll try that cool thing. And it's like, okay, that was cool, kind of dumb. You know, you don't bring the user through the journey of, this is something that I value, therefore I'm going to pay for it, and therefore I'm going to continue to use it. And so it's different from kind of the indirect monetization game of the past, where you just need to go viral because you just need to accumulate eyeballs, and hey, monetization will come down the road. Here, monetization is happening much quicker. Like Sam, you said, well, you know, monetization usually lags. In this instance, what's notable is that actually monetization is happening simultaneous to user uptake. Now, you could argue there's more monetization leverage that they have, but the dollar volume is the notable thing, not just the eyeball volume. And in that way, it's different from the other tech transitions we've seen. And it makes it, in some ways, harder to use balance sheet to exert pressure against kind of a marginal competitor, in my view. And I agree that Google's strategy team is out there being like, we're going to try to squish these guys. I think more likely it's a, fight for 3 slots in a $15 to $20 trillion enterprise value market. And there may be 4 people going after it: Anthropic, xAI, OpenAI, and Google. And so
only one loser. Only one loser.
Only one. It's like one round of musical chairs. And I think, I do think it's going to be competitive, but look at Apple's most recent move. Your favorite, Nick. Okay. Apple, which was previously collecting $20 billion-ish per year to give Google default search, is now having to turn around and pay $1 billion per year to have the benefit of using Google's AI model. It's clearly the market is totally different than it was 2 years ago, when that default slot is now something they have to pay out for rather than just accepting rent for. And so I think it's difficult to pattern match because this is a different technology transition.
But how much would have OpenAI charged for that slot? Maybe 4 or 5 billion. My point is only that I think in the near to short term, Google can use its influence to keep pricing low, and that's going to cause the market to get very confused about the monetization here. Because you're right, yes, monetization has come faster in this cycle with AI than any other cycle beforehand, but that's because it's building on previous generations of user adoptions. Like moving from Google search to ChatGPT was as intuitive of a technological shift as there has ever been. So then to just charge $20 a month, one, you're seeing the same take rate of adoption for people paying versus not paying as pretty much every other consumer platform in the mid single digits, which should be telling if you want to project that out to this market needs indirect monetization. But I just think in the near to mid term,
if you look at OpenAI's enterprise business, it's outgrowing its what they call consumer business. So, and the enterprise business is 100% monetized. So share of people directly paying is increasing. And how am I so confident that these things are monetizing well? So if you look at, there's a Apex benchmark that measures productivity for general knowledge workers. So call it consultants, investment bankers, lawyers, doctors. Okay, those 4 categories. Leaves aside coders, which we know generates a lot of productivity for, but that's its like own special subcategory, and Anthropic's going after that, et cetera. Okay, so if you make assumptions about the cost of an error of one of these things, basically an error is 2 times more costly to I, the worker, to correct than if I just done it myself. And you see how they've performed on the benchmark. It works out to, it makes me roughly a 20% more productive knowledge worker. If you look at the pricing of the $200 a month plan, and then say I pay 10% of the value of that, if I'm the average doctor or lawyer, because this is GPT-5 high, it's not the normal run of the mill. It's like you've given it a 3.5 hour task and you're letting it run to like produce the output for you. Then it actually exactly lines up at that $200 a month pricing, me paying out kind of like 10% the value of that. Okay, so one, it means that, hey, people that are paying this $200 a month are probably getting good value out of it. 2, if you look at the trajectory of improvement on that benchmark, a year from now, we think it's going to be, instead of 20% productivity delivering, it's like 60 to 70% productivity delivering. So what will that mean? It'll mean the person that's paying $20 a month is probably getting that 20%. Suddenly the value is exploding. And yes, somebody might be, oh gosh, I'm really thinking of like shifting over to Google here, even though I've already learned how to use this tool. I'm familiar with it. It's kind of like learned, I've set up projects within ChatGPT that follow my context. No, there's much higher switching costs here than there were for search, for sure. I think one of the factors that people are underestimating here is the degree to which all of the kind of like network effect stuff is pretty hyperdrive here. I mean, maybe comparable to kind of social media in that you have the social graph that sticks you in. Here you have your own personal, like the systems will map better against who you are and what you want to do and the way you want to do it. And so switching will be like switching firms, or I don't know, having a new wife or something. It'll just be like, oh my gosh, this person doesn't even know how I like my coffee. I mean, come on. And so I think that there's going to be actually a lot of pain and agony in switching, more so than switching from iPhone to Android, that's for sure.
You're crazy. That's a crazy take. That like I use these interchangeably, and it is so much
clearly
easier
you're misusing
to use.
them. You're not taking advantage of the personalization.
I'm talking about more from a consumer standpoint. I understand on the enterprise side there will be higher switching costs because it will be embedded into your company data. But on the consumer side, right now, it would cost me 0 sleep to move, and I use Gemini, Perplexity, ChatGPT interchangeably for various different tasks, and it's really just whatever one I'm in the mood for, and I find that there's very little difference.
Well,
I have like
but I think you're wrong in
complex
thinking
health
that
situation going on with my wife's family and like extended family that I'm basically like the referral consultant on. And switching the context on that thread from ChatGPT to anywhere else would actually be really challenging and difficult. As in that particular conversation that I've had with it that has a bunch of kind of like medical history, a bunch of test results, a bunch of kind of like data that, yes, I could try to figure out a way to feed it into another. It's possible, but it would be painful. And there would be a loss along the way. And here it's like there's a real cost on the back end. And that's partly why I'm paying for, like I have an enterprise account and I have a personal account. Because on the personal account, there's a bunch of stuff going on. I have a thread that's basically book recommendations for my kids, right? So it knows I have a 9 and 11-year-old. It knows all of the books that it's said to read before, the ones they've liked and the ones they haven't. It knows like kind of their individual tastes. And so I can be like, okay, he's finishing this series. Like what should he read next? And it gives me a good in-context recommendation. Now, it's possible. I could start up again with another one and be like, okay, I'm going to describe to you my kids the books they've read. And then it'll like suggest a book they read a month ago. I'll be like, yeah, I'd already read that. So this kind of thing happens on a case-by-case basis across many, many different contexts. And soon it becomes very difficult to be like, oh gosh, I have to start all over on all of these things with something else. For what? For what? Because Google's offering me like a $10 a month less discount for the next 6 months? Pfft, forget about it.
All right.
Sam, where do you sit on this? I'm very curious.
In terms of switching costs, or are we in a bubble?
Yeah, just where do you land?
Okay, I don't think we're in a bubble, right? I think that's pretty clear, at least at this stage, right? Utilization is far too high. I think the debt financing just started. So it's like, are we heading towards a bubble? Sure. It's like nothing ever goes up and to the right indefinitely. And I think there will be pullbacks, right? So it's like certainly there's probably nuance to both the investment and business decisions of Scion closing fund, of Teal closing out that position. Same with Masayoshi-san, right? So it's like, sure, there's that element. I don't think we're in a bubble. In terms of switching cost, I have not found there to be. It's like I've not embedded as much context as Brett has into any of
I
these.
don't think the majority of consumers have.
But,
I think Brett, this is.
but
where
I
you
think
need
Brett. This is my take. Brett is.
Brett's a power user.
Yeah,
I'm
no,
living in the
exactly. He's
future.
the future. Brett is the future.
I'm living a year in the future. A year
Exactly.
from now, everybody
You're in
will
the
kind of.
Google Alphabet can do a lot of damage to your switching cost thesis in a year. Is my point.
I mean,
No,
Alphabet
but
has
I think-
a lot of
I think
advantages
Brett-
here. Like
I
you can
think-
embed Gmail content. You know, there's a lot of stuff they could do.
They're already
and
doing it.
they are shipping better. But again, I don't think it's a. I think it's like
I
a
think
2 to
Brett-
3
Yeah,
horse race.
I was going to say
horse-
Brett's use case, I think, is more median average user use case. If I'm being realistic, I think probably like 2.5 years.
I don't see how people go to the doctor anymore without consulting AI. Doctors make all kinds of mistakes. Once you begin doing it, you're like, wait, why are you doing this? And they don't have like that reasonable an explanation relative to AI's explanation. People are getting misserved by their experts all the time. And
Well, the doctor's probably just a easy. I mean, same thing with everything. It's like experts are quote expert, but not data based. I can't wait.
Yeah.
Next episode, we're going into Brett's biohacking routine based on ChatGPT recommendations. But hold on, we gotta move on.
But last point. We've been doing the show for over 2 years, Sam. When we started this, the theory was Google was dead, Alphabet dead in the water. Look how far we've come. And so I think if you continue to stretch that narrative out, there's clearly players, incumbents, that have structural advantages that they're going to continue to flex to make it increasingly harder for new companies, OpenAI, Anthropic, to operate as they have been.
but they've spotted them a huge lead. And
it's narrowing by the day.
Well, no. On a percent share basis, yes, but on a users acquired basis, no. As in, if you look at kind of like the trailing user hours like picked up, they're still losing ground. And it's not to say, listen, this is like a huge destabilization of the technology landscape. And so because a company has a lead does not mean it is inevitably going to stay in the lead. I think that, XAI could do some interesting stuff in terms of user, like they have wildly performant models and they have kind of a different distribution strategy and kind of they can embed themselves in all of Elon's stuff in an interesting way. I think that Google, has gone from literally refusing to give users products to actually launching products to users. That's a big change. 2 years ago, they were like, this is a great thing our models can do, and we're not going to let you use it. And now they're like, hey, we're going to let you use these things, and we're going to charge for them. So they also have gone from charging zero to charging some. And they have other mechanisms by which they can monetize. Like you say, it's kind of like Google Cloud Storage bundled with access to Gemini is absolutely a great kind of like product bundle that OpenAI can't offer, Anthropic can't offer, XAI can't offer. And I think, 2 to 3 horse races.
All right, that was the AI bubble. I think we've somewhat aligned that this feels more like a healthy pullback to me, but let's just touch on crypto.
And I think on the data center side, NVIDIA has a bunch of people gunning for them. AMD is going after their gross margins directly. All the vertically integrated players are going after it. And you actually have to dig up pieces of ground and install equipment. Elon is NVIDIA's best friend in some ways because he's a person that can actually dig in the ground and install things and get power, placed against it. And you could imagine collectively the industry running up against a bunch of blockages that are outside of the industry within the power and distribution landscape that then causes a hiccup in demand. That's a cyclical industry. Like a hiccup in demand can back up in all kinds of weird ways on all kinds of weird players.
Right. And aside from debt financing being one sign, it's like MOUs being treated as not MOUs is another sign. It's like we've seen that before, right? And
IOUs?
like, well, it's like it's like, oh, this infinite growth. And same thing with what you're saying, Brett. It's like, enterprise, everyone's paying for it. But that's because no company's had a cutback yet, where it's like, oh, every single ARC employee is using it. It's like, yes, that's what we want. We need to be on top of all of this until all of a sudden it's like, oh, well, this person hasn't used it. And it's like, why are we paying for that, seat? Obviously, I know their pricing is different. It's by usage, not necessarily by seat. Companies charge differently. But I do think there's that dynamic. Let's move on. Let's touch on crypto for 2 minutes at max. Okay. You think this is some blow up of someone as opposed to anything more structural?
I think it's natural more structural. Crypto is in some ways like a system of beliefs. And so you can have people waver in and out of beliefs. What's happening, at least on chain in the core Bitcoin world, is people that longer dormant coins have been being brought into the market. And so kind of the core crypto people, could be just taking profits. And naturally, as people say, hey, this is a 4-year cycle and there's going to be a parabolic move here, then people begin to take leverage against the idea that that's going to happen. And the markets move in the direction of maximum pain. So if you still have like some people that have taken leverage out on that basis, it can move against those people until they get liquidated. And I think it's one of the things that's happened here is you have the previous cycle and the cycle before were all on this time pace that was more matched to kind of crypto nerds. So the last cycle, it was kind of hedge fund money, but run by crypto nerds that were motivating the capital in, and you ended up with the FTX leverage, and 3 arrows and all that stuff, and that all collapsed. The previous one was even more kind of like nerd pace, but it roughly lined up the same, where you had a halving and a run over a similar time frame. Here, there is a much bigger pocket of money available for crypto. And there's these ETFs. There's, the entire kind of global equities market potentially could participate. But those gatekeepers work just on a different time schedule than the previous 2 cycles. And so I think you're seeing kind of the core crypto nerds were like, oh, we know this game. It's going to take this long for this kind of like market rally to occur. And maybe we'll take some leverage against betting that's going to happen. And now that it's not happening, they're like, I'm caught out. Meanwhile, the gatekeepers are for the Bitcoin ETFs. A lot of them aren't even, in fact, I think all of them aren't like standardly available on platforms where financial advisors can be like, hey, I'm going to put 3% of you into this thing. Instead, it has to be the client comes in and says, I want to be in this thing. And so that just means until those kinds of unlocks happen, you're not going to motivate kind of like the giant lump of money that's out there into the exposures as meaningfully. And so I just think it's a longer cycle than people were expecting.
All right. End of the 4-year cycle. I agree. My read was everyone wanted the blow off top. It's the same kind of thing with Nvidia too. Is like everyone wanted to blow off top, both the bulls and the bears, and everyone wanted it too much and positioned accordingly. And so that's not what's going to happen. Everyone will think it's the top, and then we have the potential to climb the wall of worry.
Yeah.
I have
Nick?
a great prediction market for us.
All right.
Okay.
Wait, but quickly, 30 seconds here. Blue Origin.
They landed a rocket. Tell us.
They landed
Yeah.
a rocket. 10
A big
years.
one.
10 years, not to the day, but almost. It was very close to 10 years after SpaceX landed their first rocket. So that's incredible. It sounds like they're going to do a pretty fast turnaround time to try and use the same booster again. I tweeted out, right, number of nation states with reusable rockets, 0. Number of private companies in the US with reusable rockets, 2. So keep believing in capitalism. It takes us to the stars.
I still can't believe it's taken 10 years. What an indictment of the entire aerospace sector that it took that long. And is Blue Origin going to are they, now that they've done it, are they going to kind of catch up, or do you think they're perpetually 10 years behind SpaceX?
I think they are further than 10 years behind, if I'm being honest. It's like, yeah, because it's like if the pace that's happening with Starship, and if they can actually achieve that, it's like, I don't think Blue Origin turns around and achieves something like that, right? And it's like, sure, I think this opens up a huge amount of doors and customers and everything if they can execute as well as SpaceX did over the previous 10-year period. But I think what SpaceX is about to embark on is going to blow people's minds even more. And it's like the cost of a reusable rocket relative to a fully reusable rocket is, potentially an order of magnitude there. And they have the Starlink network up. You need to build that out if you're Blue Origin, and just the volume in the capsule to be able to put up unique and different things is going different, right? And so it's like, I don't think there's been a rate of change for Blue Origin. It's like they finally course corrected and gotten it done, whereas SpaceX continues, I think, to carry on at its pace. And so it's like, if neither of their rate of change has changed, then SpaceX should continue to gain a lead.
Who is the new front runner to land a reusable rocket after Blue Origin?
So you've got Rocket Lab, which is teed up to do that. There's a private company, I would argue probably one of the more exciting private space companies, Stoke Space, which is also trying to do a fully reusable rocket, but at a much smaller scale. But I think right now, most of the market is focused on whether or not Rocket Lab can achieve reusability in early 2026.
All right. Okay.
All right. Hit us with the ledger.
Brett's going to love it. What day will Gemini 3.0 be released? Market odds right now, 66% chance it's tomorrow. So that would be Tuesday, November 18th. 15% chance it's November 19th. 8% chance it's November 20th. And then it drops down to 2% beyond the 20th. So
what type of market are we doing here? This is like a...
You have 3 days, or you can say it won't happen this next week. It will happen.
It's like flipping.
I've got no insight. I'm following the market. Whatever's the highest odds.
Yeah, same. I don't know. I have no idea. I'm going with the same.
Nick, you seem like you got something up your sleeve here. What do you?
Yeah, you have
No,
insight.
I'm
like flushed this prediction market at us. Clearly, you've done lots of parsing of Google's.
No,
internal
the
comms,
only
so
information I have that you don't is Alphabet CEO Sundar did retweet this market with those eyes that look to the side, that emoji. So he is watching the market.
Well, in that case, it's probably this one. He wouldn't set us up for expectations of tomorrow and then deliver the day after.
So you think the 18th still, which is 65% odds?
Yeah.
It
has
think
been
so as
falling
well.
a little.
We're all on the same.
We need more divisive prediction markets.
But this one is topical because we
You just like to pump the Google idea again. I have a prediction market anecdote before we so I have a friend who's a solar developer, and a bank, to be unnamed, approaches him. So he had to buy capital equipment, I think from Brazil, to lock in place like the tax benefits before this whole tax thing happened. So he had to get it in from Brazil. He had to pay a tariff on it to get it in from Brazil for kind of like his solar project. This bank approached him and said, the amount you paid in tariff, we will give you 7 cents on the dollar for the right to collect a refund in case the government actually has to refund the tariff money. He said, well, this seems like free money, but 7 cents. How did they choose 7 cents? He goes to Polymarket. There's a market. Actually, the refund is trading at something like 40%.
So you think they're just doing ARB?
Well, so the bank was trying to lift him at, whatever, 1/4, 1/5 the value. I mean, I guess less, like, 1/6. But because the prediction market is there, he could be like, oh, well, I understand what the real odds are here. I don't need the cash. And so then therefore, no, thank you. And so it's like indicative of how these kinds of instruments can cut out kind of like a bank balance sheet based attempt to disintermediate risk.
Question on this, right? So it's like the markets are already so good, and yet volume / notional value is quite low. It's like what?
Well, do we know that they're
low
good?
in what
I don't know
sense?
if we know that we're good.
Well, they've been better. They've been better than any other source out there, I would say, in a probability weighted future outcome, right? And so it's like, to what extent does that get better? It's like how much volume actually
How much
changes
volume
how
is
it-
actually required for it to be efficient? But it depends on how much.
Yeah.
If you want to
And does it
offload a
need to-
lot of risk, you
Right.
need the volume not just to get the pricing right, but also because imagine he like wanted to go
Actually
back to the
participate.
bank and say, hey, this is what I want to do. And the bank would be like, okay, we'll give you 30 cents on the dollar. And then they could hedge it on the 40 cents. And so they could like basically make a mark between the actual economic utility and this prediction market. But they need volume there to accommodate them actually putting real money to work. So that's one thing. And then two, as you increase volume, you increase the breadth of the number of markets that could actually have fair pricing. As in, what he really needs is like amount refund, probability of refund by date, because there's a cost of capital element in there. And so kind of like the splaying out of the derivatives allows you to have more information. And maybe you get that good information on a bunch of numbers, and then there's one market that is liquid enough to actually effectively offload the risk. And then you have to kind of do some kind of, take some kind of basis risk against the underlying that you're really trying to hedge. That would be my guess.
Interesting. All right. Thank you, Wolf, for producing this. We'll see everyone next week when everyone cools off and decides that AI is good.
It's back.
It's back.
AI's back.
AI back.
ARK Investment Management LLC is an SEC registered investment advisor. ARK, Wolf Financial, and Public are separate, unaffiliated entities and do not have a relationship with respect to any company marketing or selling the products or services of the others. ARK, Wolf Financial, and Public make no representation or warranties regarding and expressly disclaim any responsibility or liability for any acts, omissions, losses, or damages of the other entities or their affiliates, officers, employees, or agents. No company shall be liable for any indirect, incidental, consequential, or special damages arising out of or in connection with this podcast or its contents. The information provided in this show is for informational purposes only and should not be used as the basis for any investment decision and is subject to change without notice. It does not constitute either explicitly or implicitly any provision of services or products by ARK, and investors should determine for themselves whether a particular investment management service is suitable for their investment needs. All statements made regarding companies or securities are strictly beliefs and points of view held by ARK and/or show guests and are not endorsements by ARK of any company or security or recommendations by ARK to buy, sell, or hold any security. Historical results are not indications of future results. Certain of the statements contained in this show may be statements of future expectations and other forward-looking statements that are based on ARK's current views and assumptions and involve known and unknown risks and uncertainties that could cause actual results, performance, or events to differ materially from those expressed or implied in such statement. ARC assumes no obligation to update any forward-looking information. ARC and its clients, as well as its related persons, may, but do not necessarily, have financial interests in securities or issuers that are discussed. Certain information was obtained from sources that ARC believes to be reliable. However, ARC does not guarantee the accuracy or completeness of any information obtained from any third party.